So today we're going to be discussing a topic that affects us all in one way or another, the Federal Reserve. We'll be answering questions like, what is the Federal Reserve? How does it impact mortgage rates? When will the feds stop raising rates? And finally, we'll offer tips for buying a house when mortgage rates are rising. Let's dive in, guys. First, let's answer the question, what is the Federal Reserve? So the Federal Reserve is often referred to as the Fed or the Feds, and it's the central banking system of the good old United States, established in 1913. Its primary objective is to promote a stable financial system and maintain a healthy economy. It does so by regulating banks, managing the nation's money supply, and setting monetary policy. Are they perfect? Heck no. Is anybody? Heck no. So how does the Federal Reserve impact mortgage rates? So now that we know what the Fed is, let's talk about how they affect our interest rates. Now, the Federal Reserve doesn't directly control mortgage rates, but it does influence them. And let me explain why. It sets the Fed fund rate, which is the interest rate at which banks charge each other for overnight loans. So when the Fed raises or lowers the Fed fund rate, it causes a ripple effect on interest rates throughout the economy, including mortgage rates. So that is why we say it doesn't directly, but sort of does affect mortgage rates. So when the Fed raises the federal fund rate, banks typically increase their prime lending rates. This, in turn, leads to higher interest rates on various loans, including mortgages, but doesn't really control them. I'm going to stress that. Doesn't really control them, but they go sort of hand in hand. When the Fed lowers the federal fund rates, banks lower their prime lending rates, which can lead to lower mortgage rates. So you see how they kind of go hand in hand. Now, when does the Fed stop raising rates, or when will they stop raising rates? And this is a common question that a lot of people have, and to easily answer it, let's get a little context. Now, it's important to note that the Federal Reserve is an independent institution, and its decisions are influenced by various economic factors. The Fed considers factors like inflation, employment, and the economic growth when making decisions about raising or lowering the interest rates. So predicting when the Fed will stop raising rates is sort of difficult. However, the Fed communicates its intentions through its Federal Open Market Committee. So now these are meetings, and they tell you, hey, this is where we're going, this is what we're going to do, this is why we're doing this. So you can keep an eye on these announcements, and you can kind of get a sense of where the Fed's stance on interest rates are, and whether if they plan on continue raising rates or shift their policy. So let's talk about tips for buying a home when mortgage rates are rising. For me, it's always a good time to buy if it makes sense for your specific situation. So rising mortgage rates can make buying a home seem more stressful, daunting, whatever word you want to put there. But look, guys, do not worry, because here are some tips that can help you navigate the housing market when mortgage rates are going like this. First, let's get pre-approved. Before you start the house hunting process, get pre-approved for a mortgage loan. This shows sellers that you're serious about buying and can help you secure a better mortgage rate. So the reason why I say this is because rates right now are very volatile. So one day they could be at 7%, the next day they could be at 6%. I say this because you should shop around for the best mortgage rate and program, not just rate and program. Don't just settle for the first mortgage rate you come across. Shop around and compare rates from different lenders to find the best deal for you. But keep in mind, the credit unions and smaller banks may offer more competitive rates than the larger financial institutions. That's just how it works, and that's just how it's always been. So you may want to consider a fixed mortgage rate. Your interest rate remains the same throughout the life of the loan, and this can be beneficial for you if you expect mortgage rates to continue to rise, right? So if you don't, then you can look at an ARM, which we've talked about in previous episodes, and this will protect you from further rate hikes, and that's it. Or you could do a lock and shop. There are different options. Adjust your budget. If mortgage rates are higher than anticipated, you may need to adjust your budget to account for the increased monthly payment. This could mean looking homes in a lower price range, cutting back on other expenses, and increasing your down payment if that is an option for you, of course. And you must be prepared to act fast, because when rates are rising, when we're in a rising rate environment, good deals can be snatched up quickly because they're just, they get on the market, boom, or even before they go on the market, they're sold. So be prepared to make a decision and put in an offer as soon as you find a home. I don't like to say love. I say like very, very strongly. Find a home that you like strongly. But don't worry, don't panic. While rising mortgage rates can be concerning, remember that they are just one piece of this awesome home buying puzzle. Focus on finding the home that meets your specific needs and fits your budget. And remember that rates are historically still very, very low compared to past decades. So guys, there you have it. A closer look at the Federal Reserve and how it impacts mortgage rates, not directly, but how it impacts mortgage rates, and some tips for buying a home in a rising rate environment. Keep in mind that the housing market can be unpredictable sometimes, and it's essential to stay informed, like listening to this podcast, and be prepared to make the best decision for your financial future. Guys, thank you so much for tuning in, and we will see you on next week's episode.